Honestly, to my mind, that doesn't look very likely. Given the rich valuations, you can time correct for sure. You can time correct maybe next 6 months odd and be in a range bound kind of a market. Nifty could hover between the range of around 18 to 19,000 at a slightly largish range I'm quoting out here. But I think, sorry, 19 to 20,000 kind of a range, basically, right? So I think that's more like it right now, unless there is an event risk which unfolds, unless the inflation reading goes beyond controllable limits, right? The food inflation, and I was reading RBI governor's statement yesterday, who said that the food inflation should ease off by September. If that happens, then I think we are well in control and well in grip. India is also entering an election year, right? A massive election year, three state elections, three big state elections, and then the general elections next year. Election years are typically good massive consumption years. There's a lot of consumption boost on the ground, a lot of money which comes into the country, a lot of money which gets spent in the rural areas by free doles and other and those other booties which are being doled out to the public at large, right? So
Reverie,
so a
as
lot
it
of
is
consumption.
popularly referred to today. Right.
Yeah, yeah. So I think those things should help at a ground level. However, inflation is something which we all need to keep a watch on, and then consequently the central bank policy action.
Right, of course. So we'll come to the macros separately. In fact, we have a lot to discuss on that front also. But let's look at the stocks in action this morning, Shweta. And interesting news coming in by way of investments in Reliance Retail. So Reliance Retail, of course, is now a 1% stake, 0.9% stake on Reliance Retail is now being taken up by QIA, Qatar Investment Authority. And that has led to an increase in the Reliance stock this morning. So what is happening really on the Reliance Retail front, Mohit, if you can just take us through, of course, in the context of the news coming on Reliance Retail, QIA's investments coming into Reliance Retail. This morning, of course, the stock is up in the green, and Reliance, of course, ever since the demerger and even earlier than that, has mostly been a buy call for most brokerages. What is really happening at Reliance Retail? What is the love that investors of all global hues, for that matter, are seeing in the retail arm of Reliance? Of course, Jio was a very different story altogether, but retail is also something which is seeing enough and more traction from global players.
Yeah, totally. I think, look, Karthik, honestly, it's an unfortunate thing that we can't buy Reliance Retail as a standalone business, and there's very limited public.
Do you think a
There's very
demerger of
limited.
Reliance Retail is also on the cards, Mohit, since you mentioned that?
Honestly, I think it looks like pretty soon, because 5 years before, I think the Reliance guys at their annual general meeting announced that they will try and demerge these businesses separately, and perhaps the time is absolutely ripe now. And you have a Reliance AGM coming on 28th, though I doubt that this announcement will be made in this AGM. But yeah, pretty soon we should see some announcements coming towards this thing. Reliance Retail, honestly, from a foreign perspective or from a foreign investor perspective, is a secular play on the Indian economy. To be very honest, it's as large as it gets. Right, you have a 70,000 crore kind of a revenue which Reliance Retail booked last year, which is a massive revenue which they are clocking at $100 billion kind of a valuation. It looks an absolutely and all the marquee names. Look, honestly, if you look at the private equity investments over a period of time which Reliance Retail has drawn, they are all marquee names out there, right? And I think, yeah, you put out the list correctly out there. So I think it's a secular play on the Indian economy, and their execution capability is par excellence, which everyone knows. And if you have to play the retail story, the India story, there's nothing better to play it through. But to play it through Reliance. The unfortunate part is you cannot buy the stock standalone. You have to buy it through Reliance Industries, and by virtue of that, you also get the other businesses along with it. So I'm hoping that pretty soon we should have some news around the demerger of this business, and people and investors should be able to buy this as a standalone thing.
All right, I think moving on to another important stock that we are tracking is by the way of Adani Group stocks. Adani Group stocks, which were on a winning streak for the past 1 week, seems to have lost substantially, in fact to the tune of 5 lakh crore rupees in a single day, all of them ending in the red as of yesterday. Mohit, what triggered?
And all of them in the green this morning.
And
So
all
I
of
think
them in
a
the green this
great deal
morning.
of profit booking
Absolutely.
yesterday, and all of them starting in the green today.
Karthik, look, honestly, I think your guess is as good as my guess, right? It's very difficult to point out why a particular Adani stock is moving up or down. And there's been so huge volatility across the spectrum on the Adani Group shares. It's very, very difficult to actually figure out what's happening in the company. Honestly, I don't see there is any fundamental trigger right now. I don't see any stock related news right now, unless there's something which is beyond my personal remit, or which is not there in the public domain, right? So it's extremely difficult to figure out what's happening on those stocks. But yes, I think one thing which is fairly evident is that the group is trying to restructure its businesses, trying to focus more towards the core businesses, trying to divest out of non-core businesses, and also trying to get in some foreign participation and some much needed cash and liquidity in the group, right? So
And deleveraging as well, Mohit. I think
that's
we've
all
seen
we can.
We've also seen reports of deleveraging, the promoters actually trying to repay the debt that was on their books. So, but all these, of course, have been coming in spurts. These are not, elements that are likely to erode 5 trillion rupees in a single day, and then all stocks starting again in the positive this morning. So, of course, there is news of GQG picking up stake. There is news of other investors taking, substantial bets on Adani. But no real triggers, like Mohit said this morning, for all Adani stocks to be in the green, and for all of them
To
in
be in the
equal
red.
measure to have lost so substantially
Right.
yesterday. But I think another interesting story, Mohit, in addition to Adani always, and going back to Reliance, of course, is the Jio financials. I mean, we've seen 3 days of hitting lower circuits, and this morning when I last checked markets, maybe your dashboard would be further updated, it was down about 4.8% again in early trade today. So how much of passive fund selling is the stock going to endure?
I think honestly, it's a very, very tricky situation, and there seems no end to this site right now. Look, passive funds are forced to exit out of it. They cannot be in an index. It's a cash 22. They cannot be in the stock which is not a part of the index, or which will not be a part of the index, right? And it cannot go out of the index till the stock comes out of the lower circuit, right? And every day the stock opens at lower circuit. There are today morning I was checking, there were almost like 67 lakh sellers, and there was no buyer in the market, right? So I don't know, maybe perhaps the index regulators will have to come out with some formula or something, or unless someone finds value in this stock and enters in at a huge buyer. But right now it looks extremely difficult, because all the passive funds have opened the stock with massive sell orders, right? There's almost 27,000 crore worth of holdings across the passive funds. It's not just passive. Other active indices are all holding Reliance. So there is hardly
Right.
a fund in the country today which is not holding Reliance, right? And by virtue of them holding Reliance, they've also got Jio. And I doubt whether most of them want to be in this business right now, because the stock is continuously seeing downward pressure. So they would all want to exit out of it and perhaps pick it up at the right price. Right now, the whole problem is who comes and picks it up first. And until that happens, the stock is not out of the stock won't be out of the index. And till such date, I don't know what's the real solution for it, right?
So, do you think at a retail level, Mohit, investors right now, retail investors particularly, are waiting for some sort of a clarity, maybe in the AGM of Reliance on the 28th, where one understands what business is JFS going to be in? JioFin, is it going to be an AMC? Is it going to be an institutional lender? Is it going to be a fintech company? I think a lot of those
is it going to
questions
be all of-
continue, or all of them.
all
I
of
mean,
them?
yeah, given the way Reliance operates, it's quite likely it is going to be everything and a lot more. So, it's difficult for a retail investor right now to make sense of what is the core business that JioFin is going to be in, despite it already being the second largest, finance company in India after Bajaj Finance.
Look, honestly, Karthik, it's not so difficult to guess as to what line of business will they take on. They've already announced a tie-up with BlackRock globally, so they are definitely getting into the AMC business. They're also getting into the financial products distribution business, so to say. And I'm sure Reliance, with its overbearing retail reach, will definitely be there in lending and other things, right? So it's not very difficult to imagine. It's just that the business right now is on papers, right? There is I'm sure they are executing a strategy behind it, but there's the proof of the entire thing is yet to come out. So people also worry that unless the business takes concrete form and shape, has different verticals to it, which though we have named it out, but yes, you still want to see all of them put together on a paper and executing a particular strategy and then delivering certain numbers, right? So all of that is still yet to happen. And before that, it's very difficult, honestly, for anyone to go ahead and pick up a stock with that conviction.
But do you think the partners like BlackRock and any other institutional investors or large global partners that Geofin would be tying up with, obviously some sort of a disclosure would have been made to them already on exactly what line of business, what strategy the group wants to execute. But that clarity on retail level is still awaited. And also, Mohit, I think if it were to get into the distribution of financial products through an AMC sort of a model, getting the SEBI license in itself is going to consume some time. So while there could be a strategy on paper, for it to get executed, we are still looking at some sort of a time horizon of at least a year or so, isn't it?
Oh, totally. Oh, totally. Even the AMC business, for it to take off, to get necessary regulatory approvals, to file for products and to launch products finally, will take some time, right? Even though we have a supreme amount of confidence in their execution capability, but yet these are all time-consuming things, right? These are not businesses which can be built within a month or so. So yeah, you're right to that extent that people need more clarity, and perhaps maybe in this AGM we will be provided with some clarity around these businesses.
Right. Let's move on maybe to the IT sector. And Shweta, interesting because Goldman Sachs is coming out with its report. In fact, it came out with it yesterday evening, stating that there is enough and more pent-up demand in the US when it comes to this discretionary spending on IT products, which pretty much is the bread and butter of Indian IT companies. And IT companies, IT sector this morning, Nifty IT as well as the heavyweights including TCS and Infosys, all in the green this morning. So Mohit, what do you make of the IT story? Pent-up demand likely to open up for the business books of IT industry in India?
Well, look, I think IT has two spectrums. Honestly, I think last night the Nvidia results in US were stunning. They were mind-blowing results, right? And they are projecting that their revenues will triple from next quarter. The AI story is playing out absolutely well for them as a stock, and I think that's rubbing off on the IT sector overall in India as well. The large cap IT. Almost there in terms of valuations, fairly valued today. Everyone, including Infosys, TCS, Tech Mahindra, quoting it around 18 to 21 times kind of multiple. So they are fairly out there. But I think the story is yet to emerge in the mid cap IT space, and that's where I'm extremely bullish on. Honestly, I think those mid cap IT names, Coforge, KPIT Cummins, MTAR Tech, I think those are good quality companies, growing massively well, doing absolutely fantastic on the underlying businesses, and showing superb growth rates. I think those are companies to be absolutely bullish on.
Talk to us specifically about Coforge, the promoters diluting their stake. Stock up this morning. It was up almost about 2% or so when we put those numbers out. What is your perception and your call on a company like Coforge?
Massive block sale, honestly, 25-26% kind of sale is not easy to be absorbed, but I think the way this company has absorbed, and you see the stock going up today, honestly, in spite of the, and I'm quite surprised with that, in spite of the block happening today morning, and such a huge block, right, and a marquee private equity name getting an exit. I think it all augurs very well for the country. Right, when a private equity firm gets such a huge exit with good multiples, they are more prompted to come back to the country, invest further, figure out more names, and further deepen their roots in the country. Specifically on Coforge, I think the business has been showing tremendous amount of value. It was NIIT Tech a few years back, and since then they have changed their sorry. Complete business strategy, right? And I think that's working very well for them. And I'm extremely bullish on a few of these mid-cap IT names.
Okay. And I think one interesting stock that we discovered this morning, Shweta, when you were, when we were discussing if there are any and which are the big private players in the space tech
mission
place.
Space tech
I think one interesting stock that we discovered was MTAR Tech. And MTAR Tech is a Pune-based company which apparently provided some critical components that went into Chandrayaan 3 and made the moon landing possible. And that stock, incidentally, when markets opened, was up about 7.88% or so. Any update you have, Mohit, on the space tech stocks per se and MTAR Tech in particular?
I was reading yesterday, Karthik and Shweta, somewhere on the Twitter, I think that the Indian Chandrayaan 3 program kind of costed around 650 odd crores. And yesterday, one single day, all the stocks which were involved went up. The market cap of those stocks went up by 50,000 crores just in
Wow.
a single day trade because of the entire thing, right? So I think that's the kind of bullishness which is surrounding these stocks. At sometimes that can get overdrawn in the market, which happened with the defense stocks, which is still continuing. And I think with some of these names which do definitely great businesses. It's not just MTAR Tech, but you have Tata Elxsi, you have a few
You
other
have
names,
Hindustan
right?
Aeronautics, Larsen and
Yeah,
Toubro, Bharat Forge, all stocks in
absolutely.
fact at 52-week high
Oh,
yesterday.
wow.
Yeah. So I think the stocks were rallying just on that news, and I think it's a good case to be bullish. But sometimes you have to be, as an investor, be very careful about at what valuations and what levels are you entering in. One has to be perhaps cognizant that the valuations are not cheap, and I again repeat, you have to be extremely careful, and you have to have a clear line of sight on the growth potential of the business plus their execution capability. It's not that the order books are empty. The order books are huge, and they will perhaps have order pipelines for few more years to come. But can they execute? Do they have the necessary resources and capability? Is something which everyone will have to judge across the spectrum of stocks.
And with the private sector opening up to space exploration, I think their only client is no longer going to be ISRO. They will have a much wider, more diverse range of clients, from startups to other large private space tech companies. And perhaps with the success of the Chandrayaan 3 and Vikram finally landing on the moon, there is likely to be a global order book also flowing into these key components for space tech.
Absolutely, with both the lander and the rover tightly in place, intact, giving us the feed that we want at this point. I believe the aerospace industry, the game has just begun for aerospace industry. All the existing stocks, of course, are on a high, but with more private players entering, perhaps we'll be discussing a different story, a bigger story, better story in days and months to come. But shifting focus to a global story that is panning out in terms of what's happening in China at this point in time. And Mohit, you know, China's story is something we're tracking here very closely. It's not just the property crisis, it's not just the demand, it's not just the output anymore, but it's also the investors losing faith in China. Chinese stock market tanking, how massive sell-off that we are witnessing.
And
What
the
are you
sell-off
making?
in blue chips. I
And
mean,
the
you
sell-off
have
in blue
China's
chips.
largest liquor company seeing a 13-day losing streak. In fact, the CSI Composite 300 index has seen a 13-day losing. $11 billion worth of
Money wiped off.
money has been wiped off from China. And yet, for some strange reason, you know, the Shanghai Composite, Hang Seng
is up.
in the green this
In
morning.
the green this morning. How do you explain this, Mohit?
Look, honestly, it's very difficult to actually figure out what's exactly happening on the ground in China. Though I think it's a common knowledge now that the property crisis is much deeper than what everyone was envisaging, with Evergrande filing their bankruptcy in US. And I was reading that one more big property company called Country something is also
Country
kind of
Garden.
going down.
Country Garden,
Country
I think.
Garden. So,
Yeah.
So it's also going down under, right? So I think the property crisis out there is for real. They went berserk in building huge properties and residential units across cities. It's not just few big cities in China, but I think the spread was far-reaching. It was across those tier 2 and tier 3 cities also. And now I think, and that time the government was also supporting all these things. But as the reality dawns upon, I think there are a lot of vacant units and there are no buyers out there. And the property crisis is spiraling across the sectors, because I think my sense is Chinese GDP, the contribution of the real estate sector to Chinese GDP is almost to 20 to 25 odd %. Is massive, right? And if that particular sector doesn't do well, the Chinese economy per se will always struggle. And that's actually showing across the sectors now, across the names now. And obviously, global investors have been losing faith on China for some time. And it all started with the US-China escalations. Honestly, most of the FII investors and the big names in the investing fraternity come from US, right? So as the situations on a political level keeps going up notches in terms of tensions and everything, I think more and more investors will try and keep away from that story. So that's also playing out, and you can see the pressure on renminbi, which has been showing for last whatever time frame, 6 odd months or maybe more, right? And I think that's where the whole problem is.
So, Mohit, do you see some sort of a subprime crisis brewing in China, almost similar to what we had seen in the US in 2008, where there was this prime lending rate which had been reduced below the prime lending rate? We are seeing a similar sort of rate cut when it comes to acquiring home loans in China. Do you see some sort of a subprime crisis building up? Though I think the demand supply story is a little different from what it was in the US. In the US, people actually availed of that subprime, went and bought houses, but did not know how to pay their mortgages, how to pay their loans. But in China, there isn't any demand despite a rate cut when it comes to home loans. So is that story also going to play out similar to what happened in 2008?
Look, very difficult to call it out, and honestly, I think central banks across the countries have drawn their lessons from the previous subprime crisis. So I doubt China will go that path. Plus, I think the Chinese economy is a far more demographically stronger economy than US, right? When I say that, you have a lot many more buyers and you have a lot more younger population as compared to what US had at that point in time, right? So there will be an intrinsic demand at some price point, and I think the central bank out there is trying and lowering rates and trying and boosting the overall property market and the housing economy per se. So my sense is it might not go to that kind of a level, but yes, I think one has to be watchful and fearful of what is happening.
But in fact, it's the rate cut which hasn't made investors very happy, and that is of course one of the reasons why many global publications are reporting that there was a massive sell-off in the Chinese stock market. A rate cut to the tune of 0.1%, bringing the rates in China at this point to 3.45%, perhaps not enough to pump in the demand that China is looking for at this point in time. There was a greater expectation.
Yeah, the reduction from I think 3.45 to 3.35, the 0.1% or 10 basis points has happened on account of home loans. So yeah, that is something that should ideally spur up demand, because Chinese have been holding on to their cash. They have been, I think everybody living in China is very wary of the ghost factories, very wary of the unemployment figures, very wary of the overall repercussions of China zero COVID, which got lifted but did not spur growth of any kind. And now with other manufacturing pockets coming up in the world, new supply chains already established and working, I think the citizens in China are very wary of investing large caps of money, investing or even making large cap purchases. So look at data, the housing sales definitely are down, but so are car sales. The largest selling cars in China, BYD, are not, no new models are being launched, and in fact prices are coming down. Even Tesla is looking at slashing rates of the Tesla cars being sold in China to spur some sort of growth when it comes to consumption. That consumption story in China is just refusing to kickstart.
Mohit, how long do you think the crisis is likely to continue, given, of course, there are measures that Chinese government is taking, Chinese central bank has taken. How long is the crisis expected to continue?
Look, my sense is honestly, Chinese government has always been extremely proactive in handling these kind of scenarios and handling the overall economic situation. And I think the overall economy has always been fairly robust because of the huge demographics which it enjoys, right? Similar to India, I think the demographic stories are fairly strong out there, right? So my sense is, and I think this year the 20-year planarium, which the China always does, is also slated, which kind of lays out the vision for next 20 years for the Chinese government and how they want to run and all, so on and so forth. So my sense is you would see run up to that, you will see some actions happening from the Chinese government, and they will try and step into stem this situation. Now, how strong those measures will be and how will the economy react to that, it's again, we'll all have to wait and watch for that. But my sense is, I think the government will step in pretty soon out there.
Final question, Mohit, before we let you go. Sorry, I think we've used enough of your time this morning. But do you see this decoupling of China and India very clearly visible now? Earlier, we used to always believe, and in fact, data would also suggest that the global economy is completely tightly coupled. What would happen in the US, what would happen in China would closely follow the same trajectory as what would happen in India. But now, for some reason, and perhaps rightly so, we are seeing a greater sense of decoupling when it comes to the global macro economy.
Oh, that I think is fairly true. I think when we say that India and US markets have decoupled, I still kind of doubt that story. But when we say that Indian and Chinese markets today, from an FII perspective, are kind of decoupling, I kind of believe in that. I kind of believe in India plus one kind of a story, and I think government is doing a lot to boost local manufacturing. The PLI scheme is working fantastically well, and there's a lot of FII interest which is coming to India uh, because I think demographically you are the biggest democracy in the country, democracy in the world right now, and I think fundamentally the way the country is showing growth and way the central bank is managing the interest rate scenario and everything else, I think it's an extremely attractive opportunity, an opportunity which no FI in the world can actually care to pass with, right? So
Okay.
my sense is yes, India continues to remain a favored destination as of now.
Okay. Do you know, going back to that saying, when the US sneezes, rest of the world catches cold. Perhaps it's not happening with India anymore. Perhaps we are moving away from
At least
that.
we are not catching the Chinese flu.
Okay. No Chinese flu, no American cold. We have our own struggles to deal with. But Mohit, thanks very much. I think we'll let you go with that. Thanks for taking your time out this morning.
Thanks, Mohit. Have a great day.
Thank you. Thanks, Karthik and Shweta.
But staying squarely focused to India and India growth story, and you know, every day on day we're talking about the GDP growth. Numbers are not yet out for the first quarter of this financial year, but yesterday it was SBI. Today we're hearing ICRA saying that India could grow at 8.5% in the first quarter, Amit.
Yeah. So 8.3 and 8.5. Like I mentioned, there is something about this quarter. Last year it was 13.1, the growth in this quarter. So probably because it's the first quarter after the closing of the books, maybe it is that fresh investment from the government side, maybe, or just good sentiments. But I think it is the first quarter. The next quarter, everybody is saying it will come down to 6% to even out. But yeah, things are looking good.
Okay. Overall, I think what's heartening is that these estimates are higher than what RBI is projecting at the moment, which is about 7.1%, and all the other research agencies, rating agencies saying it's going to be an upward of 8%. Now, whichever way it is, 8.3 or 8.5, overall, the quarter gone by has done well for India, at least to put us on our growth trajectory and help us reach that goal by the end of this year.
Absolutely, Shweta. So I think any number that comes in excess of 7.6%
will be helpful.
to my mind should be helpful, right? Because let's keep that target. I think, you know, it's very easy in the day and age that we live in. It's very easy to change our goalposts. It's very easy to sway away from a charted direction that an economy needs to take. And I think the government has come out fairly squarely, without mincing words, has stated that by 2027, 2028, definitely by the turn of this decade that we are in, we are going to be a $5 trillion economy. We are going to be the third largest economy. And RBI has said that for us to reach that figure of economic growth has to be 7.6% per annum. So I think any quarter that data comes out over that 7.6%, we are in a comfortable spot. But any quarter when data comes below the 7.6%, that means the next quarter and next subsequent many quarters will have to more than make up
and
for the
up.
lost. Yeah, you have to play catch up, right? You'll have to, for every 1% lost, you'll actually have to grow maybe 2%, 3% depending on the multiplier, because it all compounds. So you know, it's not a simple arithmetic mathematician sort of a formula that, you know, 2% कम हो गया तो 2% ज़्यादा हो जाएगा. It'll actually have to, you sequentially you'll have to grow at about 4% to play that catch up. Now, yeah, so SBI Ecorap saying 8.3%, ICRA saying 8.5%. All this is for Q1, and all of them, despite a robust Q1 figure, are linking the annual growth only to about 6.5% or so, right? So ICRA says 6.1% is its estimate for the financial year growth FY24. SBI Ecorap says in excess of 6.5%. So overall, if you see, even if you have had a robust Q1,
The
none
Q2
of the
will prove to be a
Q2,
dampener.
Q3, Q4 are not going to fire anything close to that number. So when the year ends, your annualized growth for FY24, if it is even in the range of 6.5, let's just take the higher of the two estimates between 6.1 and 6.5. Even if it is 6.5, you're a good 110 basis points behind your 7.6 to become a $5 trillion economy, to become the third largest economy. So as long as that target is there, then we'll have to ensure one way or another that that target gets met, right? I don't think government should function any differently from how corporate entities function. If there is a guidance which has been given, then that you have to move in the direction of that guidance. Now, the challenge stems from the fact that if you want to reach that guided path and glide through it, the only machinery which should do the heavy lifting cannot be capex by the government. It cannot be only government's capital expenditure. You really need the growth to kick off when it comes to private consumption, and we have a booming middle class which pays tons of taxes. Amit is working on that story, and hopefully, next week we can talk a little more in detail about the ballooning middle class taxes that get paid every year. But coming back to the point, you have to have a robust consumption story. If there is consumption, you will see a very, very direct pickup in credit from companies, FMCG, auto, IT, technology, the world over, to actually make more because they're able to sell more. But if there isn't this consumption picking up, if the consumer demand is not picking up, even if you were to get into a rate cut cycle and make loans cheaper, cost of capital cheaper, companies are not going to pick up those loans and make investments. And hence, the capex of the private sector or unleashing of the animal spirits of the private sector to make those investments is not going to happen.
Right.
So, what one needs to focus on is public consumption. And public consumption, unfortunately, is directly linked with inflation. So, if inflation doesn't come down, you want to hold on to your money, you want to only buy your essentials.
Absolutely.
And then what does
So
it leave you with?
inflation is going to be a party pooper and perhaps could ebb out by September. At least that's what RBI governor says, that it looks like that vegetable inflation, the massive inflation that we keep talking about in vegetable prices, in pulses, in all the other essential items that we consume on a day-to-day basis, could come down come September, which is just about 7-8 days from now.
Yeah, because he's pegging his hopes on that the fresh vegetables are coming into the markets now. The prices have come down of at least the two triggers, whether it's onions or tomatoes. These two have come down, and they're likely to come down more. Price caps, export curbs, all of that have been imposed by the government. And the weather probably will not go worse than this, that it has. So yeah, the core inflation figures are still down. Only the headline inflation figures were up. Those are projected to ease out in the months to come, as near as September.
As near as September. I mean, honestly, very promising, but we don't know how much of that is possible, because coming back to some of the essentials that we were discussing here for far too long now, tomato included, onions prices are inching up day by day. Tomato, I think it's still as good as what it was about a month ago.
As good or as bad?
Or bad. I mean, whichever way you'd like to put it, but it's as worse as it was about a month ago. So essentially, essential items are still very dear, very costly, and we're talking about vegetables and pulses. And as Amit pointed out, it's the headline inflation, food inflation, that continues to be a problem, because core inflation is still well within the targets. Do you think there's any merit to what is coming from RBI governor's mouth at this point in time, or is it just a lot of speculation and perhaps not based on actual data?
Or unfortunately, the monetary policy can do zilch when it comes to supply side constraints on essentials like vegetables. It is very, very directly linked to A, monsoon, and B, logistics, right? Now, monsoon is something that nobody can control. Yeah, well, of course, I mean, countries can't come together and work on a climate change, slowing down of climate change action agenda,
well, that's going to be
COP25,
long
COP27, Vision 2050, Vision 2070. None of that is going to bear any fruits or vegetables, as we may want to call it, immediately.
Not immediately,
right? That's a long-term vision. Yes, government should work towards it, but any monetary tightening or loosening is not going to impact supply side constraints of vegetable prices, right? Vegetable prices, the inflation of vegetable prices was as high as about 37%. And food inflation, vegetable inflation about 12, 13, 14%, right? Now, yes, there is going to be fresh infusion of crop. There were unseasonal rainfalls and there was crop damage. Add to that, fuel prices also hovering in the $90 per barrel region. Logistics costs also go up. So put together, the direct impact because of short supply and higher fuel prices, higher than average fuel prices at about $90 per barrel, resulted in the prices of vegetables going up, right? RBI governor is saying that, core inflation is something we can manage. And he's right. There has been a reducing trend over there. We have seen last data when it came out on core inflation it was still sticky. It was about 4.9%, good 0.9%, above the RBI's mandate of keeping it at
lower,
4%.
absolutely.
Right, but it has the 2% headroom. So it is squarely within that headroom of, between 4 to 6%. So 4.9, and that trend has been, you've seen the trend actually reducing. So over time, without any further monetary policy tinkering, it should come down to a more reasonable 4%, 4.2, 4.5% level. But on the supply side, there's nothing that RBI can do. Of course, there are fiscal measures being taken by virtue of export bans. In fact, the Nasik Onion Mandi, which had decided not to put up their stock for auction, has also yesterday ceded and said that, yeah, okay, we will participate in the auction. So I think the farmer community is also coming together to realize that, you can't let your stock just go waste. So you have to sell it. And there is going to be a floor cap also being agreed upon, that beyond this, there isn't going to be any reduction. Right. So you won't let the farmers run into losses. You will try to, step in and ensure that there isn't any hoarding happening as well. But overall, I think it is completely dependent on monsoon. RBI should continue to work towards a 4% core inflation target, and headline inflation in election year, of course, is going to be problematic for the government. But beyond what is being done already, I don't think any other tinkering should be done.
Headline inflation has been a problem for this country at least the last 2 years. It peaked last year at 7%. So last year the problems were slightly different, apart from the monsoon. So,
of course, you have the war, you had oil prices.
So they have a lot on their plate, but the monetary policy, which has been tightening, not as much as the US, has bared fruit at least as far as the core inflation is concerned.
Absolutely.
But more administrative actions perhaps needed if the inflation were to ebb out by September, which is just about 7 days from now.
Yeah, but again, Shweta, the challenge there being that any further tightening in any case is going to hamper credit offtake for the private sector, right? And any loosening right now is going to increase the core inflation back to the 4%, 5%, 6% and beyond. I mean, it hasn't touched 4, but 6% and beyond range, which again is bad news. So, at higher rates, companies are not going to go and borrow and not invest. So, it's definitely a tricky situation for the RBI.
Very tricky for the RBI, but perhaps, as I said, that more administrative action perhaps from the government, which I am sure also eats tomatoes and onions in their homes. If I were not to offend anyone and say that, it is an essential item, everybody consumes it.
And does get discussed at dining tables.
Yes, and I'm sure it gets discussed at dining tables without offending perhaps anybody when I say that. But moving on, and perhaps since we're coming to the end of this bulletin, a story that is playing out as far as smartphones is concerned. Samsung betting big on its foldables, the flip and the fold, and also hoping that it will help it get into the premium market, already getting about 30% of its sales from the sale of these premium phones.
Yes, and it's expected to increase, at least they expect it to increase. There are two flip and fold, Galaxy Z Flip and Fold. And one of them is at the price of the Apple highest, this thing, that is 1.9 lakh 1.9 lakhs, not crores.
Hopefully not.
And the other one is in the range of 50 to 90,000. So, and both of them are the fold versions of this phone. They have got record pre-bookings, which were opened from July 27 to the 17th of August this month. And what is also curious is that Apple is now working on their foldable phone, which they probably will release next year.
Okay.
So, or next year or the one after that. So, the market of foldable phones is probably coming back. We saw one Long time ago, if you remember, Motorola
I had
Razr.
the Motorola.
The Razr.
A Moto
So
Razr.
those days of foldable phones probably are coming back in the smartphone era as well.
Except it's not just the case which folds, it's the whole
Whole
screen,
screen
that folds.
that folds. But the prices are not something that we will like to
The
see.
prices are, I am assuming, north of anywhere 80,000 rupees for each of these phones.
One is less than 1 lakh. The other one is just a little less than 2 lakhs.
Okay.
So that's what
1 lakh,
you're
2
I
looking
was
lakhs?
reading somewhere, I
Yeah.
think Samsung in its press conference yesterday mentioned, the management there mentioned that 30% of its revenues
Is coming from-
are
Come
going
from
to
there.
come from foldable
Foldable phones.
So phones which are costing 1 lakh and perhaps 2 lakhs
Yes.
is going to account for a third of
third
the
of their
revenue.
revenue.
So yeah, I think curiously it makes sense because you would also have fewer number of those phones being sold, but more revenue coming per
But more
device.
money being...
I would like to add one thing. Everybody accused Samsung of following Apple. This time Apple is following Samsung.
Whoa.
Is it following Samsung though?
They haven't got a foldable phone, and speculation is rife that 2025 is when they will launch their foldable phone.
All right, so 2025, if you are an Apple user and you want a foldable phone, but for now, it's the Samsung that is betting big on these foldables, as you can see on your screens, hoping that 30% of its revenue will come from these premium phones, which are costing anywhere between 1 to 2 lakh rupees. So if you have that money to spare, Samsung phones are up for grabs. But with that, we've run out of time. Thanks very much for watching.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, Pakistan military withdraws from Balochistan, and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.
Ruthless, ambitious, manipulative, powerful. That's how the world knows Xi Jinping. And he's got even more powerful now. What drives China's supreme leader? He's the man who has threatened to annex Taiwan. He has torn up 30 years of border agreements with India. He wants to make China the biggest player in the history of the world by 2048. But what is Xi Jinping thinking? What shaped him? What's made him the most feared Chinese leader since Mao Zedong? A few key events in his childhood shaped his personality. When Xi was 10, the Chinese Communist Party purged his father, Mao's trusted lieutenant, Shi Zongjun.
Well, he was born with a silver spoon. He was the son of Shi Chungshun, who was a revolutionary who participated in the revolutionary campaigns in 1930s and 1940s. He studied in one of the most elitist schools in Beijing, reserved for the party cadets and the army cadets children. He also joined the Tsinghua University, which is considered to be #1 even today. Tsinghua University is like an IIT in India. Xi Jinping was sent to the villages as part of the overall campaign, and he was in a village conducting the Cultural Revolution campaign.
In 1966, the Red Guards ransacked the Xi household, forcing his sister to commit suicide and his mother to denounce her husband. Xi was then sent away to work in far-off Lianghihe village in Shaanxi province. Xi didn't flee abroad like his friends. Instead, he entered the CCP, the very party that had punished his father. Over the next 4 decades, he worked his way up the ladder. In 2012, he was elected General Secretary of the CCP, making him the paramount leader of China. At its 20th National Congress in Beijing, Xi is on the brink of making history. The party is likely to endorse him for the 3rd time since he took over. He has led China to become the world's 2nd largest economy with an army that most countries, especially India, view as a threat. What Xi did a few days after he took charge in 2012 should give us a sense of what goes on in his mind today.
从上海石窟门到嘉兴南湖。
He took over the power in 2012. Xi Jinping had centralized his powers extensively, and he decimated several factions within the rival factions within the party. So in this interregnum, he was able to remove many of the influences of the factional leaders.
You know, every time there's a change of leadership in China, there is a hope, particularly from the Western analysts that you get to see, to say that, you know, this gentleman, the new dispensation